right, so a couple other deeds I want to talk about real quick before we get into some math for the day. I know you're going to love that. Deed of trust. A deed of trust. Remember the other episode we talked about trust can own property? When you deed a piece of property into that trust, you use a deed of trust. All right? We have jumped over on page 90 because we've already covered those first couple deeds. So it's a deed of trust. So the trustor would deed the property into the trust. That would be a deed of trust. Now, this is going to look kind of familiar to you, and it should. If that trust has to deed the property back to the original person, it's called a reconveyance deed. What's re mean? Again or back. Convey is transfer. Looks a little like the life estate, right? If it goes back, it's a reversionary interest. If the deed goes back to the original trustor, it's a reconveyance deed. If that trust deeds property to anybody else, the trustee would sign it. It would be called a trustee's deed. Be called a trustee's deed. So this looks a lot like that life estate if you think about it. When they put it in a life estate, if it goes back to the original person, it's called something. If it goes to anybody else, it's called a different thing. Same here. Deed of trust goes into the deed. Then from the trust back to the original person would be a reconveyance. If it goes to anybody other than that original person, it would be a trustee's deed. And the trustee would sign it. Those are a couple other deeds. One last deed that may be required by a court is called a deed executed pursuant to a court order, like in a will or a receivership. Now, how you know that this deed was issued pursuant to a court order is because there is one small difference in it. Remember in the consideration clause, we told you that the generic term is for $10 and other good and valuable services, and that's the generic in every deed? Well, I lied. It's not in every deed, because this one actually would have the full price for $129,500 and other good and valuable consideration. That's the only way you know this deed was required by a judge, because the judge wants to see exactly how much this property sold for, because that money's probably got to be divided to heirs or debtors or anything like that. So the only difference is, in that consideration clause, it will actually have the real amount the property sold for instead of that generic $10 thing. Now there's some corporate deeds and things like that, but we're not going to get into it. But we are going to have some fun in math today. Some estates, Indiana's not one of them, by the way, that actually has what they call a transfer tax that has to be paid on the conveyance of the property. Florida has it. All right? So there is a tax, think of it like sales tax, all right, that is paid anytime the property switches between owners. Typically, it can be paid by the seller, can be paid by the buyer. It can be part of the negotiation in the deal where they split it, but somebody's going to pay this transfer tax. The tax is typically given as some dollar amount per some dollar amount. So for instance, it might say the tax is $1.50 on every $1,000 of value. So that's called the tax rate. It's $1.50 on every 1,000. Now, the most important thing about this transfer tax that you have to understand is this. This $1,000, I don't know if they use this, but I like think of it like this. It's like a packet, a bundle. You cannot have a partial packet. Let me give you an example. If I've got a car that holds 4 people and I need to take 6 people somewhere, how many cars do I need? 2. Why not 1.5? Because there's no such thing as half a car. You get what I'm saying? Don't go there, dude.
I bet you could prove mathematically doesn't have a car.
A lot of times I'll tell jokes to myself in my head, and when you see me smiling, that means it was a good one. But as I've gotten older, one thing I have kind of learned is some things need not be shared. All right? Now, I think Miguel gets, because he's the one that actually told the joke, and if you guys didn't hear it, I heard it directly from him. If you guys didn't hear it, you really weren't paying attention. So, tax packets work the same way. So let's use this example of $1.50 per $1,000. If the property sold for $138,500, how many tax packets, first question, how many tax packets are in this? Right? If you divide 138,000 by 1,000, you get 138.5. But you cannot have a partial tax packet. So this 138.5 becomes 139, and then you multiply it by $1.50. Somebody hit your calculator, tell me what that is. Well, so half of that's what, 64.5? 204.50? 208.25? So it comes out to be $208.50 would be the transfer tax on this property. All right? Does everybody see that? Let's do another one just for fun. If we did one, the property sold for $141 even, and the tax rate is 50 cents on every $750. What's the transfer tax? For those of you at home, sales price is $141,000, and the rate is 50 cents on every $750. Don't look at me like I know, because I just made that up. So somebody, how many tax packets are in there? If you take 141, divide it by 750, what do I get? Does it come out even? Oh, darn it. Yeah. So 141,000 divided by 750 comes out to be 188 even. So how many tax packets is that? 188. Because in that particular case, it is a whole tax packet. I should have pre-thunked my stuff. All right? So at 50 cents per tax packet means it's $94 transfer tax. Several of those in the back of the book. Probably on your exam. Any questions? Miguel? Yep. Alex? Why did I divide by 750? Because I told you that here's the value of the tax packet. Is it hard to see in the back of the room? Maybe that's what it is. We actually just had a lighting consultant in here yesterday. Had a guy look, and they've got interactive whiteboards that actually pop up on the screen. So I'm thinking about getting that, but that means your tuition is now going to be $1,500 for class from here on out. What do you care, right? I'm already through. Yeah, it's per 750 is the number I wrote on the board. So just be careful. That's the tax rate. It's so many dollars per so many dollars. The state would set that. It would be state mandated. As to who sets it was the question. Indiana does not use transfer tax. Obama tried to make it, or wanted to have that as a national thing to boost some income by just putting sales tax on all of it. All right? If you think about it, it's 4 cents on the dollar, or 7 cents on the dollar is our tax rate. That's our sales tax. This is a transfer tax to transfer the property. Any questions on that section? There are people that are exempt from the transfer tax, like gifts. Now, if you are giving between family members, governmental bodies like a HUD home may not have a transfer tax. Any charities or religious entities that are buying or selling property, they're also exempt. So there are people that can be exempt from the transfer tax. The one analogy, here's an example I put on the board. Let's try this one. If the house sold for $249,900 and the tax rate is 35 cents for every $250. I can write that on the board if you'd like. The sales price was $249,900. All right, and the tax rate is 35 cents on every 250. Alex, can you see that back there? So the first thing you do is figure out how many tax packets. You would take the $249,900, divide it by 250. Josh, what do you get? You don't want to share it with me? What'd you get, Josh? I got the answer. Well, okay, that's nice. It turns out to be like 999.6 tax brackets. Can't have 0.6 of a car. So that becomes 1,000 tax brackets, or tax packets, times 35 cents per packet. You end up with a $350 transfer tax on this real estate. Paid by probably the seller's the most common one. All right? Typically it's the seller. How you doing?
I just confused myself then. Why am I rounding 249 up to make it a whole? I'm thinking
No, you don't. Good point. Why are you rounding the 249.9 up? Because you're wrong. All right? What you need to do is you figure the number of packets for that sales price. Then round up the packets. You do not, well, in my analogy of the people, I didn't round up the people from 6 to 8. Probably would work, though, if you actually think about it. 240, no, because you'd have to round it up to the nearest 250. You wouldn't know where to round it up to.
That would only work if the tax bracket, if it was for $1,000.
No, that's what I was just saying. You'd have to know that you would round up to the nearest 250.
Right.
Whatever the packet is.
It was $138.5, but it was $1.50 on every 1,000. The tax bracket would have to be 1,000 for you to look at the sale price.
No, that's not correct. It would have to be a multiple of that.
That's what I'm trying to say.
Doesn't have to be 1,000. Could be 500. All right? The easiest way is to do it the right way. Divide by the packet size, then round the number of packets up, multiply by the rate. That's what you end up getting. I think that's enough of the math. If you have questions at home, you can email me or you guys can text me and talk about it.